Good morning, everybody. The June 20th, 2016 School Land Board meeting will come to order. First item on the agenda is approval of the minutes from our last meeting on May 9, 2016. After the board has had a chance to review and assuming no questions, comments, I can entertain a motion and we can approve the minutes.
Motion.
Second. Motion is made, seconded, and carried unanimously to approve the minutes. Next item on the agenda is the approval of the consent agenda as posted. After the board has had a chance to review that agenda and assuming no questions or comments, the board can entertain a motion to approve said agenda.
So moved. Second.
Motion is made, seconded, and carried unanimously to approve the consent agenda as posted. Next item on the agenda is number 3 as stated.
Tony Williams with Coastal Resources. Item number 3 is a proposed residential coastal easement to Mark Selsman, CE 2016-0084, Brazos River, Brazoria County. Mr. Selsman had a bulkhead on his property on the Brazos River, and it was damaged in the 2015 floods. He is proposing to repair the bulkhead and make any fill necessary to restore it to the previous location. Currently, the bulkhead is underwater. It's about 10 feet underwater at this time, and staff will not be able to determine how much fill will be required until the water goes down. You can see in this picture, Mr. Selsman's house is in danger of being lost. I talked to him last week. He did not get water in his house, but he got right up to the edge, and water has started to go down. He's not sure when the waters will be down enough for staff to go out and determine how much fill will be necessary to repair the bulkhead, but he proposes to go to the previous location and do the only fill necessary. Staff has estimated that that will be approximately 900 square feet of fill, and that will be at 10 cents a square foot per year, which would be $90. It may be less or it may be more. We will not be able to tell until we're able to get out there. There will be standard special conditions associated with fill, plus a special condition that will require the removal of derelict structures within 180 days of execution of the contract. Initially, we recommended 90 days, but Mr. Selsman brought up that the floodwaters might not go down within 90 days and asked for an additional 90 days to make that 180. Staff recommends approval.
So is approval based upon the contingency of waiting upon the assessment? And if so, what's the timing, the latest timing on the ability?
I talked to him last week, and he was thinking that it may be within 2 or 3 weeks that we would be able to get staff out there and identify the amount, but it just all depends on how quickly the Brazos goes down. If we get more rain, it could extend it longer. He was hoping to build his bulkhead, start construction by July 16th. That's what his loan is requiring. I'm not sure if we'll be able to get out there in that time frame. I mean, we'll get out there as soon as the water goes down, but I'm not sure if the water will be down by that time.
Remind me again, the issue with the loan, was it that he had a payment, or was it?
The loan, he has to use the loan by July 16th. Now, this is an area that is possibly being considered for another disaster declaration. So there may be additional funding available for him to repair, but that's still not finalized.
Is he working on an extension of that loan for additional period of time? Or?
I don't know about that. I talked to him last week, and he was more happy that his house wasn't flooded. He just wanted to, he did not indicate there was any kind of extension, but he was very happy his house was still there.
In the attachment, there isn't, I'm not finding exact language for what you're asking for the board to authorize. So could you just state that for the record, and then?
Staff is asking the board for approval of coastal easement 200160084, which would authorize a bulkhead and fill on the Brazos River to Mark Selsman, exact square footage to be determined when water goes down.
Thank you.
So moved.
Second. The motion carries unanimously. Motion was made, seconded, and carried unanimously to approve item number 3. Next item on the agenda is number 4. Thank you, Tony.
Good morning. Steve Rodriguez, Asset Management. Docket item 4 is LC 860017, LGH Limited, Clear Lake, Galveston County. This item is a renewal to commercial easement on coastal public land. It compromises approximately 2.94 acres of encumbrance. This is a dredge channel that provides access for a commercial marina complex. The previous contract had a term of 10 years with an annual rate of $8,243.64. In an effort to be consistent and maintain the current rental amount, staff is requesting the rental rate to remain the same for the next 10 years. The total consideration for the 10-year term of this contract is $82,436.40. Staff recommends approval of docket item 4 as posted.
So moved. Second.
Motion is made, seconded, and carried unanimously to approve item number 4. Next item on the agenda is number 5.
Good morning, Commissioner, board members. Ken Mills, Office of General Counsel. As you know, the board has discretion to reduce penalties and interest for unpaid or delinquent royalties. Assessment of these penalties and interest often comes up in the context of an audit by land office staff. Accidentally touched the screen, sorry. Staff proposes an amendment to 31 TAC Section 9.51. Regarding criteria, the board might want to consider in evaluating a written request to reduce penalties and interest. These criteria include, among other things, the lessee's good faith efforts to resolve problems discovered in the audit, the lessee's past record of timely payments of royalties, and the risks of litigation. Audits aren't the only context in which penalties and interest for delinquent or unpaid royalties come up. With small operators, an illness in the family or some other temporary situation can delay royalty payments and trigger the assessment of penalties and interest. Staff also asks that the board delegate to the commissioner its authority to reduce penalty and interest if the same criteria of good faith and history apply, but in amounts that might not warrant full board attention. We've recommended $25,000 in the aggregate as the de minimis threshold for this delegation. That amount could be changed at any time by the board as an agenda item at an open meeting. The entire proposed submission to the Texas Register is included in your packets for your information. Staff recommends sending the proposed rule amendment to the Texas Register for publication and public comment, and delegating to the commissioner the authority to reduce interest charged or penalties assessed for unpaid or delinquent royalties if those amounts are $25,000 or less in the aggregate. And I'm available for any questions.
So it's limited to the 25,000.
Yes, sir. This proposed delegation, the combination of penalty and interest would have to be at or less than $25,000.
And before you always had to come back to the board?
Well, for penalties or interest associated with unpaid or delinquent royalties, that is a board decision. Penalties for late reports, which you sometimes hear about as well, that's actually already in the commissioner's discretion. We sometimes package it all up in one proposal. But so yes, if we had previously, if somebody, and we've had this situation, incurs $3,500 in penalties and interest because they were 3 months late, we would have to come to the board to get permission to reduce that.
Thank you. Motion to approve.
Motion is made, seconded, and carried unanimously to approve item number 5. Thank you for that. Items number 6 through 10 will be in executive session. School Land Board will now enter session pursuant to Chapter 551, Subchapter D, Section 551, Tech 071 of the Texas Government Code for discussion and consideration regarding pending or contemplated litigation and or settlement offers, or to seek or receive attorney advice or counsel related to items 6 through 10 on the docket, and subsection 551, Tech 072 for the discussion and consideration concerning the purchase, sale, exchange, lease, or value of real property related to items 6 through 10 on the docket. Following executive session, board will reconvene in open session to complete the docket. The open session of the June 20, 2016 School Land Board meeting will resume with item number 6.
Ken Mills, Office of General Counsel. Staff recommends settling this audit matter on the terms discussed in executive session. May I answer any questions?
So moved.
Second.
Motion is made, seconded, and carried unanimously to approve item number 6. Next item on the agenda is number 7 as stated.
David Wells with Asset Management, and staff recommends approval of docket item 7 as per terms discussed in executive session.
Motion.
Second.
Motion is made, seconded, and carried unanimously to approve item number 7. Next item on the agenda is number 8 as stated.
Good morning, Susan Shugart with Asset Management. Staff is recommending approval of the subject property in Matagorda County under the terms and conditions discussed in executive session.
So motion.
Second.
Motion is made, seconded, and carried unanimously to approve item number 8. Next item on the agenda is number 9 as stated.
Sean Seal with Asset Management. On item number 9, staff recommends approval of item number 9 as discussed in closed session.
So motion.
Second.
Motion is made, seconded, and carried unanimously to approve item number 9. Next item on the agenda is number 10.
Thank you, Mr. Chairman. Members, I'll slow it down a little bit now. I know that you look forward to that. So approval of this item is going to constitute your approval of a co-investment by Texclo on behalf of the Permanent School Fund alongside Intervest Energy Institutional Fund 14 LP through a newly created co-investment structure called Capital Co-Investments 12 LLC. The IEC is recommending that Texclo co-invest up to $100 million alongside Intervest 14 through Capital Co-Investments 12 LLC. Just for background purposes, the board currently has a $150 million capital commitment to Fund 14, and Fund 14 is a closed-in, commingled fund sponsored by Houston-based Intervest. It primarily focuses on acquiring U.S. oil and gas properties that possess significant development potential, yet are underpinned by a solid PDP reserve component. Also, the board has a $75 million capital commitment to an upstream co-investment transaction alongside Fund 14 through Capital Co-Investments 11 LLC. Intervest has recently identified another very attractive investment opportunity in the upstream space and has solicited a select group of interested potential co-investment partners from within the pool of Fund 14 limited partners to participate alongside the fund in that transaction. Intervest reps initially presented details of the proposed co-investment to staff in early May of this year. Due diligence materials were subsequently made available to staff and the Townsend Group for review and analysis. A due diligence call with staff, Townsend and Intervest, was conducted on May 19th, 2016. Intervest reps then made a detailed presentation to the IEC and to Townsend on May the 31st. And that was followed by a due diligence call with Houston-based oil and gas reservoir engineering consultant W.D. Von Gotten and Associates on June the 8th. In conjunction with this review and analysis, staff and the IEC have determined that the proposed co-investment fits within the framework of the Texclo PSF Real Assets Investment Policy Statement and is in the best interest of the Permanent School Fund. Therefore, the IEC is recommending that you approve a co-investment of up to $100 million in the proposed transaction alongside Intervest Fund 14 through Capital Co-Investments 12 LLC, and I'm happy to answer any questions.
Assuming there are no questions, and for the record, thank you, Rusty, I'm going to recuse myself from voting on docket item number 10, and a memo has been placed in the meeting file for the SLB June 20th, 2016 meeting. Any questions from the board on the item?
Move to approve.
Second.
Motion is made and seconded with one abstention to approve item number 10. Next item on the agenda is number 11 as stated.
Thank you, Mr. Chairman. For the record, Rusty Martin, Chief Investment Officer. This is a non-voting item. I'm pleased to present you with a quarterly investment report on the Texclo Permanent School Fund Real Assets Investment Portfolio for the period October 1st through December 31st, 2015. The performance measurement calculations and the statistical data that are presented in the QIR were prepared by State Street Bank and its Private Edge Group. Those are the board's custodial, accounting, and performance measurement agents for the portfolio. Fourth quarter 2015 U.S. GDP increased at an annual rate of just 1% after increasing 2% in the third quarter. And for the year, overall GDP was 2.4% higher. That was the same rate as in 2014 and well below the long-term average rate of around 3%, or actually 3.3%. Consensus at that time indicated that an average annual growth rate in GDP of 3% would be expected for 2016. Also, during the period, the unemployment rate fell to 5.0% from 5.1% in the preceding quarter. As expected, the Fed finally did change Fed policy during the quarter, raising Fed funds rate to 0.25% to a 0.50%, a 25 basis point move. That was a well-telegraphed move, and it was based on their view that there was considerable improvement in the U.S. labor market during the year, and that it's reasonably confident that inflation will move back to its 2% long-term objective. Fed expects that economic conditions will evolve in a manner that warrants only gradual increases in Fed funds rate. Thus, they probably will remain below levels that are expected to prevail in the long run. The actual path of Fed funds will depend on the economic outlook indicated by incoming economic data. The U.S. commercial real estate market, as measured by NPI, returned 2.91% for the quarter. Its trailing one-year return was 13.33%, extremely impressive one-year returns for real estate. All of the quarterly individual sector returns were positive for the 23rd time since the second quarter of 2008. Retail was the best performing sector in the quarter, followed by industrial. The gross returns for each sector of NPI were hotel, 3.03%, retail, 3.46%, apartment, 2.73%, industrial, 3.19%, and office, 2.58%. Very, very strong returns. In the energy markets, not so good for oil in that fourth quarter. WTI oil prices were very volatile during the quarter. They fluctuated mostly between $40 and $45 a barrel, but ended the period down almost 18% for the quarter at about $37.13 a barrel. That downward pressure is reflected primarily by the continued near-record production by OPEC, mostly led by Saudi Arabia and Iraq. Also, a weak global economic backdrop, a stronger U.S. dollar also. Most analysts still expect a significant price recovery by early 2017, and indeed, since the end of the year, we have approached $50 a barrel on WTI, so as supply and demand begins to rebalance, you're going to see prices increase, and we already have. Most analysts still expect the price recovery by early 2017, mainly due to the fact that current pricing does not generate acceptable drilling economics. That at that time, drilling at $37 a barrel is just not attractive for anybody. So we should also see a significant change and significant reduction in global supply over the remainder of this year also. Gas ended the year with an average quarterly price of $2.12 a million BTU. That was the fourth straight quarter below $3, and the average price for the full year was only $2.62. That was the lowest annual average price since 2012. So gas prices continue to lag, primarily because production growth continues to exceed current demand, creating oversupply. And that's going to be a continuing problem for a while until things like the LNG exports come online. Those aren't going to come online until, I think they'll start coming online in 2017. Also, warmer weather during the winter months curtailed demand greatly. So gas is still going to be a struggle, although I think the futures strip is showing gas at $3, maybe a little over $3 now. So maybe things are going to start balancing out a little bit later. As far as the portfolio is concerned, at the end of the year, the total value was about $4.76 billion. Of that, 44% of it was the external portfolio, which was $2.1 billion. The internal portfolio was $257 million, or roughly 5% of the total. And then the cash equivalent investments, which are basically commitments that are just not funded yet, was about $2.4 billion. The external portfolio returned 2.37% for the quarter versus the benchmark 1.82%. The real estate sector of the portfolio was actually up 2.77%, and infrastructure was up a whopping 6.41%, but the energy sector of the portfolio did drag down the overall performance. The energy sector of the portfolio was down 3.14% during the quarter. On a 1-year, 3-year, and 5-year basis, 1-year return 10.54% versus 9.65 on the benchmark, so outperformed the benchmark by 89 basis points on a 1-year return. 3-year return was 13.43 versus 9.88, so we outperformed the benchmark by 355 basis points, and the 5-year return on the external portfolio is 16.24% versus 10.71. On the benchmark, outperformance there is 553 basis points. At the end of the year, about 43% of our total capital commitments remained unfunded. On an individual basis, 28% of real estate was unfunded, 50% of infrastructure, and of course 57% of energy, since those energy and infrastructure commitments are the newest. They are the ones that are the least funded. The internal portfolio returned 2.61% for the quarter and a 14.81% 1-year return. That portfolio has now experienced 20 consecutive quarters of positive returns. On a combined basis, the portfolio outperformed the benchmark by 57 basis points at 2.39% versus 182 on the benchmark. Also on the 1-year and the 5-year, outperforming the benchmark by 138 basis points on a 1-year return at 11.03% versus 9.65, and on a 5-year return, 14.79% versus 10.71. So a combined portfolio performance of 408 basis points above the benchmark on the 5-year returns. As far as property type diversification, we still are generally over-allocated to real estate. We're at about 54% on an invested basis versus a target of 33%, but that will continue to change as time goes by and those other investments become funded. For example, at the end of the quarter, even though we were well over 50, we're at 54% on an invested basis. If you take a look at how we were on an invested plus an unfunded commitments basis portfolio-wide, real estate was only at 41% of the portfolio. So closing down on our targets. As far as geographic diversification, we're very close to the targeted allocations for each of the regions. The allocation to the U.S., excluding Texas, is about 80% of the portfolio. The target is 75%. The Texas allocation specifically is 12% versus a target of 15%, and the international allocation is around 8% now compared to a target of 10%. Again, this is a non-voting item, informational only, but I'm happy to answer any questions.
It's a lot of information.
Yes, it is. It's all good, though. It's good information.
That's good.
No questions? Thank you, Rusty.
Thank you very much.
That being a non-voting item, wanted to also thank Richard, Jeannie, and Kaylee Bragg for coming in from Denton. We love having visitors join us at the school land board. But the last item not being a voting item, we can hereby adjourn this meeting of the board. Thank you.